Okay, so you've given us like a ton of info about your TSP. So we're
Yeah.
going to dive into all that, like really try to get to the bottom of, what's going to be the best way to make it all grow for your retirement.
Perfect.
Yeah. And all of this is based on the fund performance data that you sent and those optimization strategies, right?
Mm, uh-huh.
Okay, cool. Oh, and by the way, this episode is brought to you by stonefly.com. They're really like the pros when it comes to data management.
I've heard of them.
Yeah, they've been around for over 20 years, helping people with all sorts of things like SAN, NAS, S3 object storage. They do it all.
Wow.
Backup and disaster recovery, cloud, AI, security technology. It's pretty impressive.
That's a lot.
It is. But anyway, back to your TSP.
Uh-huh.
Today we're going to like really break down what's in all that data you gave us so you can make like the smartest decisions possible, about your TSP.
Right. It can feel so overwhelming sometimes.
Oh, totally.
Yeah.
Okay, so let's just start with the basics.
Yeah.
What is the TSP?
Sure. Well, the TSP, or Thrift Savings Plan, has been around since 1986. And it's the retirement savings and investment plan for federal employees and members of the uniformed services.
Right. And like over the years, it's grown quite a bit from its early days, right?
Oh, definitely.
Yeah.
Yeah. It started with just a few options, but it's become way more comprehensive.
Yeah. You've got the G Fund, which came out in 87. Then the C and F funds the next year in 88.
Right.
A few years later, they added the INS funds in 2001. And then the life cycle funds Roth option in 2012. And more recently, even a mutual fund window.
Mm.
So like now you've got like a whole bunch of choices.
Yeah, and it's important to note that Stonefly actually works with folks from all those areas we were talking about, like healthcare, government, education, finance, legal, all of those.
Oh, really?
They provide those data management solutions across a whole bunch of different sectors.
Huh, interesting. Okay, but let's get back to the TSP. So how's it even managed? Like who's in charge of all this?
So the TSP is managed by BlackRock Capital Advisors, but it's overseen by the Federal Retirement Thrift Investment Board. And that board is a really important part of the picture, especially for folks under the FERR system.
The Federal Employees Retirement System.
Exactly. You see, they get that sweet 5% matching contribution, which is a big deal when you're thinking about planning for retirement.
Totally. So basically free money, right?
Pretty much.
Nice. Okay, so let's talk about how these funds actually perform. Like when we look at the C, S, and I funds, those are the big stock market ones, right?
Yeah, they're all about stocks, but they each do things a bit differently.
Right. But historically, the returns have been pretty different, haven't they?
Yeah, for sure.
Okay, so the C fund tracks the S&P 500. For our listeners who don't know, that basically represents like the biggest 500 companies in the U.S.
Right.
And it's done really well. The average return since '88 has been something like 11.16% per year.
It's pretty impressive, yeah.
It is. That's like a pretty solid way to grow your money, right?
Definitely. And when you look at the S fund, which focuses on smaller companies, the small cap stocks, it's averaged about 9.21% since 2001.
So still good, but not quite as good as the C fund.
Exactly. And there's more volatility with small cap stocks. They go up and down a bit more, which can be exciting but also riskier.
Right, right. And then there's the I fund, which invests in companies outside the U.S.
Yeah, the international market.
Right. And that one's averaged around 5.18% since it started in 2001. So even lower than the S fund.
Yeah, it's known that the international markets haven't always kept up with the U.S. market.
Yeah, I've heard that too. So it sounds like if you want solid long-term growth, the C fund is the one to go with, at least when it comes to stocks.
It seems to be the strongest contender, yeah.
Okay, let's switch gears a little. What about those funds that are supposed to be safer, like the F fund?
Oh, you mean the fixed income index fund?
Yeah. So I thought bonds are supposed to be the safe bet. But what does the data say about that?
Well, the F fund's performance has been challenging that idea lately.
What do you mean?
Well, for the past 10 years, its average return is only about 1.64%.
Oh, wow. That's not great.
No, it's not. And in 2022, it actually lost almost 13%.
Seriously.
Yep. So it shows that even bonds, while generally less risky than stocks, they can still lose money, especially when interest rates are going up.
So they're not as safe as people think.
Well, they are less volatile than stocks, but yeah, they're not risk-free.
Right, right. Okay, so the data you sent over actually says that the F fund might not even be giving people that stability they expect from bonds.
Yeah, that's right.
Huh, okay. Well, what about the G fund then? It's always been called the safest option, right?
That's true. The G fund is designed to be the safest in terms of not losing money.
Right. Like it's never had a loss.
Exactly.
So what's the catch?
Well, the thing is, you got to think about inflation. If your money isn't growing at least as fast as inflation is rising, then you're essentially losing purchasing power.
That makes sense. Like things get more expensive and your money doesn't keep up.
Exactly. Over the last 10 years, it averaged about 2.57% return.
Okay, so not bad, right?
Well, the problem is if inflation is, say, 5%, which it has been recently,
Yeah.
that means your money in the G fund is actually losing value by like 2.43% every year.
Oh, I see.
So, especially for people who are retired and living off that G fund income, it's a problem.
Okay, yeah, that makes sense. So it's safe, but it's not really growing your money.
Right. It's about preserving what you have, not necessarily growing it.
Okay, I got it. Now, what about those L funds, the life cycle funds? They're supposed to adjust automatically as you get closer to retirement, right?
Yeah, that's the idea. They make it super easy, but there are a few things to keep in mind.
Okay, what are those?
Well, one thing is because they include all the funds, even the S, I, and F funds, which we've talked about and their challenges, it makes things a bit more complex, maybe unnecessarily so.
Ah, I see.
Yeah, and that could affect your overall returns.
Right. The data we have actually suggests like a different way to approach the L funds. Like you can actually tweak them, right?
You can certainly create a customized approach that might work better.
Okay, and how do you do that?
Well, the idea is to mainly use the C and G funds and adjust how much of each you have depending on your age.
Okay, so if you're young, what should you do?
If you're in your 20s, you've got a long time until retirement, you can handle more risk.
Right.
So you might put like 90% in the C fund and just 10% in the G fund.
Oh, wow. So almost all in for growth.
Exactly. As you get a little older, say in your 30s, you shift it a bit, maybe 85% in C and 15% in G.
Okay, and as you get closer to
You
retirement.
keep gradually moving more into the G fund to protect your savings.
Got it. So like in your 60s, it would flip, right? More in G than C.
Precisely.
That makes sense. Okay, so now let's talk about people who are already close to retirement or even already retired. The TSP rules changed a few years ago, right?
Yeah, in 2019, they passed the TSP Modernization Act.
Right. So what did that change?
Well, now if you're over 59 and a half, you can take out money from your TSP more easily. Well, you can do up to 4 partial withdrawals each year. And this is a big one. You can actually move your TSP money into a regular IRA or a Roth IRA without any penalties.
Wow, that's a big deal.
It is. It opens up a lot of new possibilities.
So why would someone want to move their money out of the TSP? I mean, it's been their retirement plan all this time.
Well, even though the TSP is great for saving, it might not be the best for actually managing your money once you're retired.
What do you mean?
Remember how we talked about the G and F funds?
Yeah.
Well, they're not really going to make your money grow that much, especially with inflation. And they might not give you enough income to live on comfortably.
So what are the alternatives?
Private IRAs and Roth IRAs often have way more options for investing.
Okay. And what does that mean for retirees?
Well, you could potentially earn more and have more control over how your money is used to create income during retirement.
Got it. You actually mentioned something called TSP Maximization, right?
Yes.
Yes.
It's a strategy specifically for folks over 59 and a half or those who are already retired.
Okay, and how does that work?
The idea is you move some or even all of your TSP savings into a private IRA or a Roth IRA. But, and this is important, this doesn't affect your regular TSP contributions or the government matching if you're still working.
So you can still keep adding to your TSP.
Exactly. It's just about making the most of the money you've already saved.
Right. I see. So it's like you're switching gears to focus on how best to actually use your savings in retirement.
Exactly.
Okay, I got it. And I think you mentioned a webinar to learn more about this, right? Something about maximizing your TSP.
Yeah, exactly. Apparently, it dives into all those investment options you can get with private IRAs and Roth IRAs. Things like guaranteed no-loss options, the potential for returns averaging 8% or more over the last 10 years, even cash matches or bonuses of up to 10%.
Wow, that sounds pretty great.
Yeah, it does. And they often come with lower fees and more flexibility than the TSP, especially when it comes to taking out money.
Wow, so it sounds like it's definitely worth checking out for folks who are eligible. Great. And speaking of great things, our sponsor for this episode, Stonefly.com, is pretty awesome too. They're like the experts in data management.
Yeah, they've been in the business for like over 2 decades, helping companies of all sizes manage their data with solutions like SAN, NAS, S3 object storage, backup, and disaster recovery.
Wow.
And they're not stopping there. They've got cloud solutions, AI integration, and top-notch security technology.
Yeah, they even have this special offer going on right now. It's for a 70-terabyte high-performance appliance that's fully redundant and can even be expanded up to 4 petabytes.
Yeah, it's a pretty incredible deal.
It is. It's got everything like air-gapped, immutable backup, disaster recovery, and it works with all the major platforms like Veeam, Rubrik, Commvault, and Site Recovery.
Plus, it's got their object lockdown technology built in, which is like a super shield against ransomware.
Wow.
Yeah.
And it's all for just $7,995.
It's a steal for that level of data protection.
Totally. So if any of our listeners are in charge of data management at their company, they should definitely check out stonefly.com or just email them at sales@stonefly.com.
They've got a great team ready to help.
Awesome. Okay, so to wrap things up, let's go back to the TSP. What are the key things you want our listeners to remember from all this?
Okay, so first, the C fund has had the strongest returns historically.
Right.
The F&G funds, while they're considered safer, might not give you the growth you need for retirement, especially with inflation eating away at your money.
That's a good point.
And for the L funds, it's worth looking at the specific investments they include and maybe consider making some adjustments based on your age.
Yeah, like we discussed.
Exactly. And if you're over 59 and a half, remember, you've got more options now. You can take money out or even move your TSP savings into an IRA or Roth IRA.
Right. So as we finish, just think about your own TSP and what you want for retirement.
Yeah, think about how comfortable you are with risk.
Exactly. And whether your current strategy lines up with your goals.
And remember, don't be afraid to explore other options like TSP Maximization.
Yeah, you've got options. And, while we're on the topic of exploring options, Stonefly is a great example of a company that's pushing the boundaries of what's possible in data management.
Definitely. There are leaders in SAN, NAS, S3, object storage, backup, and disaster recovery.
They do cloud, AI, advanced security technology, and they build it all with a cyber-resilient architecture, so you know your data's safe.
If you need help managing your data, they're a fantastic resource.
Totally. Check them out at www.stonefly.com or email sales@stonefly.com.
You won't regret it.
Great. All right, that's it for this episode. Thanks for listening.
Yeah, thanks everyone.
We'll catch you next time.
See ya.